Okay, guys, today is Wednesday, the 15th of June, and just doing another follow up from yesterday's video. Where we started to get some movement, and I thought I'd just post a quick video to kind of follow up on it was kind of random, the particular trade that I entered late last week, and I've kind of just been following on from with that video since then. So which is good because then you can kind of track it. So um, also I've been getting a few emails and honestly, guys, I haven't really when I first started doing these videos, it was really just more for myself, because it helps kind of ground me, especially when I find it hard to follow rules, so doing this kind of helped me, kind of, I guess, talk out loud to myself, exactly what I'm doing, what I'm looking at, why am I doing it, and it kind of kept me grounded as well. So, but I didn't really expect to really, people to watch or anything like that, and I didn't really expect to get many subscribers at all. But in the last, well, the first at the start it was quite slow. Only I had a few, but in the last probably few weeks, I've had another 30 subscribers or something, which is really cool. So I'm guessing what I'm doing is helpful. So that's really a big plus for me. So so I'll just continue on doing what I'm doing, and just shoot through some feedback. Or even just provide a comment. Even if you don't think I'm right on anything, that's fine, because this all trading isn't about being right. So it's about psychology, money management, and so forth. And honestly, like, I still have my battles. So and I get them. I still get a lot of calls wrong. That's fine. But yeah, thanks for all your support, and yeah, let's see how we go. So yeah, just wanted to follow on from this video from the S&P from I did yesterday. So yesterday was we saw some big moves over the last few days, and now we're heading into the Fed announcement, which is tonight, which is going to be, absolutely critical, where the market goes from here. So now, I mentioned in one of my videos previously where I said that heading into the Fed announcement, it tends to get a bit quiet. But when you notice that the stock market is heading down or getting sold pretty heavily, which it tends to be, before the Fed announcement, they tend to come out with some sort of decision or whatever it is that comes out that tends to influence the market to rally. Okay, it happens quite regularly. Same thing with when the market's rallying, and a lot of buyings and taking place. When heading into the Fed announcement, and usually they'll kind of put the brakes on, and then whatever decision comes out will tend to influence the market to sell the market down. So, which kind of leads me to, well, what's the decision going to be tonight? Well, I've always said that I don't think they're going to raise rates. That'd be really stupid if they did. Now, keep saying that they need to raise rates, but, they kind of back themselves into a corner where they're, if they raise them, they're screwed. If they don't raise them, they're screwed. So what I think is going to happen tonight is I don't think they're going to raise it. So they're either going to cut it or hold it. I'm leaning towards more of the hold, okay? I highly doubt they will cut it, but, you never know with these things. And like I said, heading into there, we see the stock market's been heading down. We've still got, still another 12 hours or so before the Fed meeting. Now, this is where you can kind of use different markets, look at different markets, and use different markets to kind of correlate what's going on, right? And not, kind of predict what's going to happen, but not necessarily predict in terms of, predict to taking a trade, predicting what they're going to do. So you can see we've had 3 or 4 days of down move here. We've come back into this important support level, right? Which is, we kind of expected that it's going to come into this level and kind of hold out around there. So, and how we do that is basically just using Fibonacci's, right? So, and Fibonacci's tells us the market's kind of went back down, touched the 61, which is a very important fib level, and then we kind of we kind of rallied towards the close of yesterday. Now we're kind of just, kind of just holding there, right? Now, what this tells me is that when we get these 60, when the market hits the 61, we tend to get a bit of a bounce, at least some sort of minor retracement before we see some continuation. But this tells me that we're likely to see some more upside heading into next week, I guess. But before that happens, if I go down to the 1 hour, right now, heading into the Fed announcement, like I said, there's going to be some sort of news, unless the market all of a sudden just rallies up like crazy, which I doubt it will. Then for now, it looks like the market's going to just kind of hold around this area, which tells me that the Fed's going to probably hold rates, and that's going to probably because they've been talking for the last month or so, they've been talking about raising rates, and that's kind of had a bit of a negative effect on the stock market and so forth. But heading into they're going to want to keep the stock market up, keep the confidence there, and so forth. So that's what I think is going to happen, and provided that we trade around this zone here, around this zone, maybe a little bit below, then likely we're going to get a decision that's going to influence the market to buy this up. So next question is, well, can I take the trade now? Can I look to get in early, right? Well, you can if you want to, but you got to understand what your risks are, right? Because anyone that knows FOMC knows that these times is where the market can move really hard and fast, right? And it moves both directions too, so you got to be careful, right? Because you might have stops that are way too close, or you might be risking too much. Or even better, if you're like day trading this or you're intraday trading this, like you're going to get caught out by the spikes, like the market's going to spike like crazy, and it's going to do psychological damage to you, because you're going to be like, oh well, do I sell or do I buy? And then you're like, oh shit, it's going to go up, and then you sell it, then all of a sudden the market reverses, and then you close your trade and so forth. Like we've all done that before, so there's nothing to be embarrassed about. But let's just say the market does come down to retest these levels, because I do expect it to come down, at least come down to retest these levels between now and FOMC. Now, if it does go down here, then and we do get a decision that influences the market to head up, then the first level you'll be looking at to as a selling point, or as a major resistance level is this level here, which is the 2084, rough give or take, right? That would be your first level of resistance, right? Now, if the market does head up before FOMC and then trades around this level, then you'd expect to be shorting this market, right? Now, that's not to say to short it all the way down. I'd say to short it and take targets around the next structure level, or it could be there or it could be here. But anticipate a potential reversal, right? Because like I said, if the Fed does make a decision that does influence the market to rally, then naturally, when we get to this level here, then we're going to see some retracement. So that's not to say that if whatever decision they come out with, the market will rally straight away. Like, it doesn't do that, right? It might. What I got told was that you should always trade. The first move is usually the wrong move, right? It's the second move that's usually the right move. Okay, so just bear that in mind. Now, the other important thing to note is that, like I said, I think the market still has, the down move. The down move of the last few days was not strong enough. It's particularly yesterday. It kind of like slowed down quite heavily. The volume wasn't there too. The volume was okay, but it wasn't quite there. But this was kind of a level that I kind of expected that if we were going to see. If we were going to if we were really going to keep going down there, we would have broken below these levels already. But we stalled there, and looks like we're going to get continuation. So the market's now putting in this kind of pattern that I've shown you guys so many times, like that appears on pretty much any market, right? So it's kind of done this, and then it's done that, and looks like it's done that so far, and then looks like, based on what I've seen in these patterns, we're going to see another upside move to possibly maybe even create new highs, right? I'm not going to rule that out now. So, but if we see that, then we would likely see some sort of retracement, right? And then from here, we're likely to see either one of two things. We're either likely to see move to the upside like that, or we might see some kind of like a breakdown, like a false break, and then a move to the upside, right? So that's 1, 2. Or the other thing is we can the market can completely fake us out and then just roll over from there, right? Like that's possible. We're gonna take that into consideration. I did forget one more, the fourth one that it could do, which is this, right? So which it could do is it could, when it does that top, it could literally just do a minor retracement back into structure and then rally from there. Okay, so that's another possibility. Either way, you don't want to just randomly take the trade. You want to make sure that you got confirmation, right? And the best way to get confirmation in these sorts of markets or patterns is waiting for the breakout, right? That's the safest way to do it. So, so what I mean by that is, I'm not going to draw it again, but if it went like that, and then like that, and then let's say, you really want to be careful buying or selling, shorting around these levels here. You really want to wait for the breakout. So whether it breaks out from here, or here, you really want to make sure that it breaks out first, closes above this level, right? And then we get the retracement back into previous structure, and then you can look for a buying entry to go long. But again, I'd be very careful with anything long in this market because this is pretty overextended, right? Now I talked yesterday about the bond market because the bond market is telling us a lot of things, right? Now not many people look at the bond market, and I don't look at it as much as I should. But generally when the bond market is going up, the bond market and stock market trade inversely to each other, right? Now when this is like as it is now, like they're both going up, so one has to give way, and it could be the bond market, could be the stock market. I don't know which one it is, but the bond market is very, very important because that's where all the real investors are, like the ones that really know what's going on. Like I guess you can say the smarter ones, right? Whereas the stock market tends to be, you got smart people in there as well, but you tend to have like retail traders like myself, and you have other mums and dad investors, like I say, it's not very so yeah. But the other thing to note is also I'm looking for clues in terms of what the Fed might do, right? So I'm kind of just showing you what I look at. So the gold market is going to be important because the dollar and the gold trade inversely to each other, as you already know. And if the Fed were to raise rates, then that means that dollar would be stronger and therefore gold would be weaker, right? So you can see here, looking at the chart at gold here, you can already see, and like I said, like the technicals tell you a lot in advance, right? So the technicals are telling me that the market's kind of done this, right? We rallied, we put in bullish consolidation, then we broke down, broke below, closed below, and then the market rallied, right? Now we're at the level of major resistance, right? Now we're kind of at the decision point, right? So does gold break out from here or does it pull back? Now, based on what I've seen in the past with these sorts of patterns, heading into major resistance, the market is likely to retrace, right? Now, how far it goes back down, I don't know, but let's just say it goes down to here, at least does a 50%, right? 50% retracement, right? You can make a case to say, well, once it does that, we could see a breakout from there, right? But I'm not talking about that now. I'm just talking about in terms of the Fed decision, what price is going to do. So heading into this is telling me that we're going to see retracement, which means that like if we go into the Fed meeting and the market's still trading at that level, then that gives me more, confirmation that we might likely see the Fed saying that they're going to hold rates, right? Which is when they say they hold, tends to keep the currency stable, and it might even push up the dollar. Who knows, right? Because the dollar's been beaten pretty hard over the last few weeks. So looking at this, I'm thinking that we're going to see a retracement, which tends to mean that the Fed might be holding rates as well. So that's that there. But yeah, again, going back to the stock market, like I said, we can always say that, honestly, I've been, I always say, I'm waiting for this crash, I keep saying that, we're there, etc., etc. But, deep down, guys, really, I don't want this to crash, right? I actually want it to go up. I actually don't want to see it crash, right? I want to, like, it's going to happen sooner or later, but like I want it to stall out as long as it can, right? Because the reason why is because it gives me more time to, and gives you more time to get prepared for whatever it might be the case. Might be buying more metals, might be like getting rid of stocks, whatever the case may be, or making more money. It doesn't really matter. The point is it gives us more time. So the longer they stall this out, the better it is for us. But which means that when this does crash, it's going to crash pretty hard, right? So, going to keep that in mind. You know, like there's plenty of opportunities still to make money. So, like I said, you know, like if I didn't get stopped out here, like I would have made a fair bit just from this trade here. But you know, obviously it did. But it doesn't matter. It's not to be. Don't need to worry about it. But like I said, this is all. This whole game is all psychology, right? Being the most important, and it's a numbers game, right? It's numbers and probability, right? And when I say numbers, I mean it's based on mathematics, right? Now, I don't mean mathematics as in like, you know, learning specialist maths or anything like that. Like it's all just looking at, you know, looking at patterns really, right? And using various tools to calculate various support and resistance levels, major levels, right? Which is not even that hard, right? You can just look at this and put it in there. But you know, that's all it really is, right? It's probabilities, right? You might see this setup, right? Just say your strategy was to trade this particular setup, right? So whenever this setup happens, then you would buy here, right? Just for example, right? Even you do your back testing, right? Like it doesn't mean that every time you see this pattern, it's going to play out, right? Some might be losers, right? And the point is like you want to make sure that the setup, the strategy you're going with is going to be like profitable over a certain period of time. So which means that this has to be a winner like a good number of times, right? But there will be periods where you will see more losses than usual, and you're going to have to deal with that. And the problem I had before, and the problem with a lot of people is that you see this, you might have like 30 trades in a row where you're winning, and all of a sudden you see 5 losing trades in a row, right? Now you didn't do anything wrong. There's nothing wrong with the pattern. It's just the market just decided to go against you, whatever the case may be. But then people tend to panic when they see this, right? Because they had 30 trades in a row winning, and then all of a sudden they had 5 losses. They think that something's wrong, and then they start changing things up. They might ditch the strategy, or they might do something, might play around the rules, and then they find that when they change it and they go to it, and then they find that they get more problems, right? And then when all they should have done was just kept trading the strategy, because you might have had 5 losses in a row, but if you stopped, right, and you change your strategy, or you change training technique, or whatever the case may be, and start trading something else, if you come back to it, you'll probably find that the next 5 trades after that might have been winners, right? Or they might have been losers, but then you would have had your string of winners again. And that's just seasonal, because sometimes the markets, just certain times of the year, certain strategies or patterns might not trade well. That's the bottom line. So that's about it. As long, like I said, if you've got a strategy that returns 50% or 60% win rate, and you combine that with money management, man, like it doesn't really matter if you have 30% winners and 70% losses, because once you apply money management and you stick to those rules, you can really make a killing just from that. So yeah, and I do know a few people that are very profitable from a ratio of 30% wins and 70% losses. So just thought I'd just share that with you. But yeah, like I said, I think we're going to get a Fed hold today, and we might get some. Market's going to hold around these levels for a bit. We might see a spike down. We might see a little bit of a spike down, but if we do see that, we're going to see a bit of a snap rally back up. So, and I don't know how high this is going to go. We'll see what happens. But best of luck. Hope that helps, and I'll talk to you soon. Cheers.